Something is happening around the Iraqi Dinar story that is getting a lot of attention online right now. Claims about a new, daily IQD limit, are spreading rapidly across social media and currency communities, and naturally, that has IQD holders asking one big question. Is this simply another rumor, or is it connected to the larger financial reforms happening inside Iraq? Today, we are going to slow the story down, separate what is actually confirmed from what is being speculated, and look at why limits on cash and foreign currency are becoming such an important part of the Iraqi banking story in 2026. And before we go any further, there is one important distinction you need to understand. A limit involving dollars, traveler allowances, bank withdrawals, or cash transactions is not automatically an Iraqi dinar revaluation. That distinction is extremely important because online discussions can take one genuine banking announcement and turn it into a much bigger RV claim within hours. So what is actually happening? In July 2026, the Central Bank of Iraq reduced the foreign currency cash allowance for Iraqi adults traveling abroad from $3,000 to $2,000. Multiple Iraqi news sources reported the change, describing it as part of efforts to improve foreign currency management and encourage greater use of electronic payment methods. That is real, but notice what the announcement actually concerns. It is a foreign currency allowance for travelers. It is not an announcement saying that the Iraqi dinar has suddenly been revalued to a dramatically higher international exchange rate. And it is not evidence that every Iraqi citizen can only use a certain amount of dinars every day. This is where the daily IQD limit conversation becomes confusing. People online are taking different pieces of Iraq's banking reforms and putting them together into one narrative. One post may talk about cash limits. Another may talk about dollar availability. Another may talk about electronic payments. Another may mention a monthly allowance. And then someone combines all of those stories and says, Iraq just introduced a daily IQD limit, and this must mean the RV is coming. That conclusion has not been officially established. But there is still a bigger story underneath all of this. Iraq has been moving toward tighter financial controls, greater transparency, increased electronic payments, and stronger oversight of foreign currency transactions. And that is important. In fact, the Central Bank of Iraq's own announcements page shows that the bank continues to issue banking and financial directives during August 2026, including Treasury bill and Islamic certificate announcements. So when you see the phrase, limit, spreading online, don't immediately focus only on the number. Ask what is actually being limited. Is it Iraqi dinar cash? Is it US dollar cash? Is it a traveler allowance? Is it a bank withdrawal? Is it a foreign currency transaction? Or is it simply a limit imposed by a particular bank? Those are completely different things. And this distinction could save IQD holders from making decisions based on misleading headlines. Now let's talk about why this story is spreading so quickly. The Iraqi dinar community has been watching banking reforms for years. Whenever Iraq introduces a new banking regulation, changes access to foreign currency, expands electronic payments, or strengthens compliance procedures, speculation about a possible monetary reset often follows. That doesn't mean every reform is an RV signal, but it does mean the banking system itself deserves attention. Iraq has been working to bring more transactions into the formal financial system. The country's banking sector has also faced significant scrutiny over dollar transactions and compliance. For example, Reuters previously reported that Iraqi authorities restricted several banks from accessing US dollar transactions as part of efforts to reduce fraud, money laundering and illegal use of US currency. That history matters because today's reforms did not appear out of nowhere. There has been a broader process of tightening the financial system and improving controls around foreign currency. And now we are seeing another piece of that process. The July 2026 traveler allowance reduction is particularly interesting because the central bank connected the move with better management of foreign currency and greater use of electronic payment methods. So the bigger question isn't simply, is there a daily IQD limit? The bigger question is, why is Iraq continuing to reshape the way cash and foreign currency move through its financial system? That is a much more meaningful question. And here's where the story gets even more interesting. Iraq is not simply trying to change how much cash people carry. It is also trying to modernize how financial transactions happen. Electronic payments, bank transfers, digital records, compliance systems and formal banking channels can make it easier for authorities to track transactions and reduce informal cash activity. That matters for monetary stability. It also matters for international banking relationships. And it matters for anyone watching the long-term development of the Iraqi dinar. But again, we have to be careful. A stronger banking infrastructure does not automatically equal a currency revaluation. Think about it this way. A country can modernize its banking system without changing its official exchange rate. It can reduce cash usage without announcing a new currency value. It can strengthen foreign currency controls without re-denominating the currency. And it can increase electronic payments without launching a new dinar rate. So if somebody tells you that a cash limit is proof that the Iraqi dinar will suddenly jump to $3, $5, $6 or another specific figure, there is no official evidence in the information we are discussing that establishes such a rate. That is where responsible analysis becomes extremely important. Now let's look at another development. In July, reports also indicated that the central bank had eased certain rules concerning the cash disbursement of dollar-denominated deposits held by customers. Iraq Business News, citing Iraqi state media, reported that banks could disburse customers' dollar deposits in cash beginning July 15 under specified conditions. Notice how interesting that is. On one side, Iraq is tightening certain foreign currency allowances. On the other side, there are rules allowing eligible dollar deposits to be accessed in cash. So this is not a simple story of Iraq is banning cash. It is more complicated. The authorities appear to be trying to control how foreign currency enters, moves through, and exits the formal financial system. That is a very different story from simply saying, Iraq has placed a daily limit on the dinar. And this is exactly why viral headlines can become misleading. A real regulatory change can be transformed into a completely different claim when it passes through social media. Someone sees a $2,000 monthly foreign currency allowance. Someone else sees a banking cash restriction. Another person sees Iraq's continued push toward electronic payments. Then suddenly the headline becomes, New Daily IQD Limit, RV Next. That headline may generate clicks, but it doesn't necessarily represent the actual policy. Now let's talk about the RV angle. Could banking reforms eventually be connected to broader monetary reforms? It is possible that continued financial modernization could be part of Iraq's longer-term monetary strategy. But there is a huge difference between saying, this reform may be relevant to the future of Iraq's monetary system, and saying, this proves an RV is imminent. The first statement is analysis. The second requires official evidence. And as of the information available for this video, there is no confirmed Central Bank of Iraq announcement establishing a dramatic new IQD exchange rate because of this supposed daily limit. That is the line we need to keep clear. If you're an IQD holder, you should watch the actual signals. Watch the Central Bank of Iraq. Watch official banking announcements. Watch government financial reforms. Watch exchange rate policy. Watch international banking relationships. Watch currency management regulations. And most importantly, watch for an actual official announcement regarding the exchange rate. Those are the things that matter. Not anonymous screenshots. Not Telegram messages. Not social media posts claiming that someone heard a new rate. Not countdowns. And definitely not claims that a random limit automatically means a revaluation tomorrow. Now, does the $2,000 traveler allowance matter? Yes, but probably not for the reason some online posts are suggesting. It tells us that Iraq is continuing to manage access to foreign currency. The reported reduction from $3,000 to $2,000 per adult traveler represents a one-third reduction in that particular allowance. That can be viewed as part of a broader effort to manage foreign currency demand and encourage formal electronic payment channels. And when you combine that with Iraq's broader banking reforms, it becomes a development worth watching. But it should not be presented as a confirmed RV announcement. Now imagine the situation from the perspective of the central bank. The bank has to manage foreign reserves. It has to maintain confidence in the financial system. It has to monitor foreign currency flows. It has to support international banking relationships. It has to deal with demand for US dollars. And it has to encourage the banking system to become more transparent and modern. Those objectives can require restrictions, allowances, electronic systems, compliance measures and new procedures. So a limit can actually be a banking management tool rather than a currency revaluation signal. That is one of the most important lessons from this story. Now let's address another question many IQD holders are asking. Could a reduction in dollar availability increase demand for the Iraqi dinar? Potentially. Changes in foreign currency access can influence market behavior. But we cannot automatically conclude that the dinar will appreciate dramatically because of one regulatory change. Exchange rates are influenced by many factors: oil revenues, foreign reserves, government spending, import demand, dollar demand, monetary policy, banking conditions, political stability, international financial relationships, and market expectations. All of these factors matter. So if you're analyzing the Iraqi dinar in 2026, you need to look at the entire financial system rather than one viral headline. And that brings us back to the phrase everyone is talking about: daily IQD limit. Right now, that phrase should be treated carefully. There are confirmed limits and allowances involving foreign currency. There are banking restrictions and cash management rules. There are continuing reforms toward electronic payments. But that is not the same thing as a confirmed nationwide daily IQD limit connected to an RV. If you see a post claiming otherwise, ask one simple question. Where is the official document? If there is no central bank document, no government announcement, and no credible banking source confirming the specific claim, then treat it as unverified. That doesn't mean the story is completely meaningless. It means you should separate the verified part from the speculation. The verified part is that Iraq is continuing to change how foreign currency and banking transactions are managed. The speculative part is whether these changes are secretly preparing the country for a major revaluation. And that distinction is crucial. Now, here's another reason this could become a major discussion among currency watchers. Iraq's financial modernization has been moving toward less dependence on physical cash. That transition can have long-term consequences. When more transactions move through banks and electronic systems, financial authorities can gain better visibility into economic activity. It can also reduce some of the problems associated with informal cash markets. For a country trying to strengthen its banking system and improve international financial integration, that can be significant. And that is why the current limit story deserves attention even if it is not an RV announcement. The real story may be less dramatic than the headline, but it may also be more important. Because monetary reform is often a process. It doesn't necessarily happen in one giant announcement. A central bank can first improve banking controls, then strengthen payment infrastructure, then improve currency management, then increase transparency, then expand digital payments, then adjust monetary tools, and only after those foundations are in place could larger monetary decisions become easier to implement. That does not mean a revaluation is guaranteed. It means that structural reforms are worth watching on their own merits. So where does that leave IQD holders today? First, don't panic. Second, don't rush to exchange or buy additional currency based only on a viral post. Third, don't assume that every new banking restriction is an RV signal. Fourth, pay attention to official Iraqi financial announcements. And fifth, remember that a real exchange rate change would be much bigger than a social media rumor. If the Central Bank of Iraq officially changes the exchange rate, that would be a verifiable event. There would be documentation. There would be official communication. Banks would have to respond. Financial institutions would update their systems. And the information would be much harder to hide. That's the kind of signal that would matter. Until then, we should keep the facts separate from the excitement. So yes, the conversation about IQD limits is spreading fast online. Yes, Iraq has made real changes to foreign currency allowances. Yes, the central bank reduced the traveler cash allowance from $3,000 to $2,000. Yes, Iraq continues to modernize and tighten its financial system. But no, that does not by itself prove that the Iraqi dinar has been revalued. And no, we should not present a specific future RV rate as confirmed without an official announcement. The most interesting part of this story may actually be what happens next. Will Iraq continue reducing dependence on physical cash? Will electronic payments expand further? Will foreign currency rules become even more structured? Will banks become more integrated with international systems? Will the central bank introduce additional monetary reforms? Those are the questions that could provide much stronger clues about Iraq's financial direction. And if you're following the Iraqi dinar in 2026, those developments are worth watching closely. The key takeaway is simple. Don't chase the rumor. Follow the policy. Don't focus only on the word limit. Find out exactly what is being limited. Don't confuse a foreign currency allowance with an IQD revaluation. And don't treat an online RV claim as confirmed until the Central Bank of Iraq or another authoritative institution actually says so. The Iraqi banking story is moving. The financial system is changing. Foreign currency controls are evolving. Electronic payments are becoming more important. And that means there are legitimate developments to follow without needing to exaggerate them. So if you're watching this because you hold Iraqi dinar, keep your eyes on the official channels. Because if a genuine monetary announcement comes, the evidence will matter far more than the rumors. And if the daily IQD limit story develops into something different from what is currently being reported, that distinction will be important. For now, the strongest confirmed takeaway is that Iraq is tightening and reorganizing parts of its foreign currency framework while continuing broader banking modernization. That is a real story. The RV remains a separate question. And until there is official confirmation, that is exactly how we should treat it. If you found this breakdown useful, make sure you stay tuned for the next update, because Iraq's banking reforms are continuing to develop, and the next official announcement could give us a much clearer picture of where the country's monetary system is heading. This is not financial advice. Currency speculation carries significant risk, and viewers should verify important financial information through official sources and qualified professionals before making financial decisions.